Good morning, everyone. Welcome to another RF crypto video. This is our third video, and yeah, let's just jump straight into the markets. So today's crypto market's been quite boring. It's barely moved. It stands at 2.25 trillion market cap, moving by a mere 0.08% from yesterday. Wow, so exciting. But I mean, it's the nature of the beast at the moment. People are just consolidating. People are just watching the market how it unfolds, with all the news relating to the U.S. inflation and the new variant. People are just either holding or holding off from investing in order to analyze what the situation in the market is before making their next move. So Bitcoin decreased by 0.06% from yesterday, which isn't much of a move. It's hovering between 48 and 50,000. It hovers between those bands, and we haven't seen much movement between that support and that resistance level. Ethereum is down by 0.23%, which isn't much. Everything else is quite boring. Solana, surprisingly, down to 2.2%. I think on my first video I said that it was at 171 and it was a good buy. Now it's at 165, which is an even better buy. I think I'm gonna jump into it a little bit. I already have some Solana. It's always good to dollar cost average. So Cardano is down by almost 1.5%, and the rest of the coins are up slightly. Polkadot is up by 2%, XRP is up by 1%, Terra is up by 2%. Let's see your meme coins. Dogecoin down by 2%. Shiba Inu up by almost 1.5%. I mean, it's all purely speculation, so who knows why why these moved. But as you can see, the market is just moving laterally. Nothing is really happening, and we'll just have to see next couple of days, next couple of weeks, how the markets unfold, especially with Christmas coming along, New Year coming along. The markets usually react to these holidays or around these holidays, and we'll see in which direction it moves. Let's move on to the news now. The Bitcoin hash rate hits near all-time high. So when China banned all the crypto mining in their country, the hash rate dropped by almost half. As you can see, it was all the way up to 180 million EH per S, and then it dropped even below half, so below 90 million. So the hash rate is basically the computational power in the blockchain network. It's how much power there is for mining new Bitcoin and for validating transactions in the Bitcoin network. So the hash rate is important. It's an important metric for assessing the health of the network. It's just tells you how strong the network is and how secure it is. The more machines that are dedicated by miners to discovering the next block, the higher the hash rate rises and the harder it becomes for malicious agents to disrupt the network, basically. The hash rate decreased by half because China banned all cryptocurrency mining and all these miners moved abroad. I mean, they weren't going to stay in China because they're banned, so they looked for other avenues. And obviously, because Bitcoin mining and cryptocurrency mining is so profitable, they weren't just going to shut down operations. They were going to look for elsewhere that allow Bitcoin mining to take place. And they did. So any increase in the number of miners pushes Bitcoin's difficulty up, which then drives the hash rate up. The more miners there are, the more transactions get validated, the quicker the network gets, the more Bitcoin is mined, and the stronger the network gets. Moving on, UAE's wealth fund Mubadala Investment Company is investing in crypto ecosystem. This wealth fund used to be skeptical about crypto, thinking it's more of a speculative market. Now it no longer thinks that. Their CEO, Khaldun Al-Mubarak, actually said that. Reading here, he says that, I think crypto is real. This is a business that had $200 billion worth of value 2 years ago and is at 2.5 trillion today. So it's more than 10x. And it's growing. So while many people are skeptics, I do not fall in this category. If a CEO of a major global wealth fund, I mean, Mubadala Investment Company is one of the largest wealth funds in the world with $243 billion in assets under management. If a CEO of such a company believes in crypto, with their array of analysts, with their array of experts, with their array of advisors, then it's clear that the future of the world is blockchain and it's cryptocurrency. And the Abu Dhabi headquartered fund is investing in the ecosystem around crypto, be it blockchain, energy usage. They haven't said what they're investing in, but for sure they're going to start investing more in crypto, more in blockchain. And if you look at Mubadala's portfolio, they're basically invested in every continent except for Africa and Australia. I mean, let's just click on a random company. They're invested in pharmaceuticals. They're invested in private jet companies, hyperscale data centers, biology platforms. I mean, they're invested in a wide array of profitable companies in different sectors. So now cryptocurrency is one more sector they're going to be investing in. And they usually invest in companies that they believe is going to grow, but at the same time disrupt. What better industry to invest than cryptocurrency or blockchain in general? So this is an interesting space to look at. It's going to be interesting to see where Mubadala invests in what companies they invest in, and in what type of blockchain platforms they invest in, be it cryptocurrency, be it layer 2 solutions, DeFi, gaming, metaverse. It'll be interesting, and it's definitely worth keeping an eye on, given that it is a major wealth fund. Let's move on with some good Bitcoin news. Bitcoin touches new milestone with 90% of total supply minted. It's 90% of all Bitcoin, so 90% of 21 million Bitcoin has already been mined. So only 10% of Bitcoin is left to mine. But because of the halving, so every time a miner gets a computational algorithm right, they get awarded with a block. And for every block, they get awarded with a certain number of Bitcoin. At the moment, they are getting 6.25 Bitcoin for each block that they mined. This is going to drop to 3.125 Bitcoin after the next halving in 2024, and the halving will keep going. The next halving will be half of 3.125, which is 1.5 something. This is why the entire supply of 21 million won't get mined until February 2140. I don't think I'll be alive by then, but it would be exciting to see what would happen after all the Bitcoin have been mined. So here they say that 18.89 million Bitcoins have been mined and open to the market. However, it is important to know that despite the fact that the total supply is 21 million, when all Bitcoin is mined, not all 21 million Bitcoins will be available to trade in the market or stored in exchanges or hot wallets. This is because a lot of Bitcoin has been lost, misplaced, and gone forever. Chainalysis, which is a crypto analytics firm, they estimate that 3.7 million Bitcoin have been lost based on analyzing address activity, from reasons ranging from losing one's private keys to even death. Also, when Bitcoin was formed, its founder, Satoshi Nakamoto, which it's probably a pseudonym, no one knows who he is, he said, I'm going to keep 1 million Bitcoin for myself. What's the harm in that? At the time, Bitcoin's price was 0.0000003. So 1 million Bitcoin wasn't a big deal. But now, 1 million Bitcoin is worth over $60 billion. Let's just think about that for a second. No one knows who this person is. No one knows if he's alive. Based on his name, they say he's Japanese, but who knows? It could be a pseudonym. And 3.7 plus 1 million, almost 5 million Bitcoin is already out of circulation. So that brings maximum supply to 16 million. And as time goes on, more and more Bitcoin is going to get lost due to unfortunate circumstances, such as people forgetting their private keys, people forgetting their passwords, or even death, and their relatives don't know what the passwords are, or that they even have cryptocurrency. So it is very important to keep your private keys safe and secure. Do not store them on your computer, because that can be easily hacked. And despite the fact that you have an antivirus or a firewall, the hackers now are very, very smart, and they have advanced tools that they can get access to your computer. And if you store your private keys in a file, in like a Word document, Even if it's hidden, they can still access that. So make sure to store your private keys only physically and never have a digital copy of them, because that's the only proof you have that the wallet is actually yours. A supply of 21 million, now 16, maybe it's going to go down to 14, 13 million. So if Bitcoin keeps gaining popularity as it has in the past few years, the demand will increase. While supply is decreasing, simple economics tells us that its price is going to be pushed up as time goes on. So moving on, I want to talk a little bit about ZK-Rollups. They are a layer 2 solution, especially on the Ethereum network, and they've become the latest trending solution for scalability because it allows a network to handle a lot more transaction at a lower cost. So ZK-Rollups work in a way in order to decrease cost and increase scalability so that the transactions are processed faster, in a way that they roll up hundreds of data transfers off-chain, and then they generate a cryptographic proof known as a ZK-SNARK, which stands for Zero Knowledge Succinct Non-Interactive Argument of Knowledge. We don't need to say it out loud every time, we can just say ZK-SNARK. And it's a proof of validity of hundreds of transfers in the form of a hash and is eventually placed on the main chain. So what happens is, off the actual main chain of the Ethereum network, for example, a lot of transactions take place. They get bundled up and then they get sent back into the main chain as one transaction, just like the Lightning Network does. So they had early success in 2021. For example, DYDX, a decentralized perpetuals and futures exchange, was one of the earliest adopters of ZK-Rollup technology. They partnered with Starkware, whose Starknet network is a permissionless, decentralized ZK-Rollup. What was the result of that? The platform has seen a decent amount of success, and the processing of transactions have gone up exponentially. They even managed to process a higher 24-hour trading volume than Coinbase. ZK-Rollups are a scaling solution that work, and a lot of people in the crypto industry are having a look at this. A lot of companies are looking to implement this, and even Polygon has invested 250 million Matic coins. They invested in a project developing two subcategories of zero knowledge proofs, or ZK-Rollups, known as Plonk and Halo. They want to speed up their process. They want to get into a layer 2 solution that actually works, and ZK-Rollup is one of them. The total deposits into ZK Sync, which is another scaling solution made by Matter Labs, which secured a $50 million funding in a Series B round. Their unique users in less than a year went from nearly 0 to 180,000. The deposits went from literally 0 to over $100 million. And this is less than a year after. This is before ZK-Rollup has been seen as mainstream. What the future holds for this? It looks very good. It is a great scaling solution with very few disadvantages. Finally, I want to talk a little bit about tapering. There has been fears that the Federal Reserve want to quicken their tapering or stop their money printing or buy bonds after the latest inflation point. So the Consumer Price Index, which is a measure of inflation, in November rose 6.8% from a year earlier and 0.8% from October. 6.8% is massive in the US, at least. It's a developed country which with inflation rates usually hovering around 1 to 2%. 6.8% hasn't been seen since the early 90s. And because inflation is so high, Sarah House, she's a senior economist at Wells Fargo, she says such high inflation rates are basically a confirmation that the Federal Reserve are on track to begin hiking rates at some point next year. Basically, why the Fed would want to hike interest rates is because if inflation rates are very high, prices are rising too quickly. A good tool in economics, or a good monetary tool to counter this inflation, is interest rates. If you increase interest rates, what happens? The cost of borrowing goes up. If the cost of borrowing goes up, that indicates that people and companies are less willing to borrow money from commercial banks. If less people and companies borrow less money from commercial banks, there is less money in circulation. Less money in circulation means less transactions. The economy will slow down by a little bit, but it will also bring down inflation. This is just because there will be less money in the market for the same number of goods. If it were the opposite, if the Fed decreased the rates, borrowing would become cheaper, people would borrow more money, more spending, more money for less goods means that there is inflation. It's only natural. So on Wednesday, they're going to conclude their two-day meeting and release a policy statement at 2 p.m. Washington time. So this is a very important announcement. Please add this to your calendar. It'll be interesting to see what they say. So Jerome Powell, the chair of the Federal Reserve Bank, said that it is appropriate, I think, for us to discuss at our next meeting, which is in a couple of weeks, whether it will be appropriate to wrap up purchases a few months earlier. Here it says the Fed is currently scheduled to complete its asset purchase program in mid-2022. Assets means bonds, to slow buying by $15 billion a month. If they start slowing down their purchases, less money is going to go into the market. Inflation is going to go down, but less money is going to be printed by $15 billion a month. That's $15 billion a month less money coming into the market. That's $15 billion less to spend on assets like cryptocurrency. So David Kelly, the chief global strategist at JP Morgan Asset Management, he usually gets things right. He usually has a fantastic team that makes correct predictions on the Fed's decisions. He says that I think that their plan right now probably is 3 rate hikes next year and 4 rate hikes in 2023, which is very, very probable given the high inflation rates in the United States. Here they say that inflation rate rose by 6.8%. But if you ask any American citizen, they'll tell you that prices have gone up by 15, 20, even 25% in the last year. If you go to the grocery shop, you're spending 15, 20% more. Fuel, you're spending 15, 20% more. 6.8% I think is an understated figure. It's closer to 15 and 20%. I think the public is starting to open their eyes. If your inflation is 15 to 20%, that means that cash, your money, if you hold cash, is losing its value by 15 to 20%. And it is a fact that people are looking to hedge that by investing more in hard assets, such as real estate, such as gold, cryptocurrencies. It's not really a hard asset that you can hold in your hand, but it's a hard asset in the sense that you have it, it's yours. And also stocks. If you put money in a bank right now, you don't get anything for it. But if you had bought a house last year, let's say in the USA, and you sold it today, you could have sold it for 30% more than what you bought last year. Prices have gone up so much because it just shows you that the demand for real estate has gone up because of fears of inflation. S&P 500 up 20%, Bitcoin up more than 100%. So people are starting to realize that holding cash, you're just setting yourself up for pain, for your monetary base to erode. Your capital is not being preserved. If you see that the real estate is booming, that's the reason why. If you see that the stock market is going up, that's the reason why. So that's all for today. Thank you for watching, and I'll see you tomorrow for the next one. Cheers.